The Reserve Bank have dropped the official cash rate to 3% and signalled that it will get all the way down to 2.5%-ish by the time we get into 2026. Now, you might remember from the last time we predicted what might happen at the last OCR announcement, I thought that they might drop it even faster to try and get people excited for the fact that interest rates were going to be cheaper and that we could just get on with it. And I was wrong. But it almost feels like at this meeting, that's exactly what they've done because they've sent people into a bit of a frenzy of, better times are a-coming.
Mate, that was quite fortuitous of you, and I trust that you have sent Mr. Shrewsbury the greatest slice of humble pie to say, I told you so. Have you heard from him?
I haven't heard from him, no.
Disappointing.
Very.
Disappointing. And you're not the only one because there's a lot of people out there that are saying, it's not happening fast enough because stuff's just not happening and we're waiting for these rates to decrease for people to feel alive.
It did seem like a little bit of a flip, like a 180 of kind of we need to be worried about inflation, it's still pretty sticky and we can't be cutting it too quickly and whatnot to now like, okay, we need to bring it down and we can look through inflation at the moment. We can see through to 2026 and don't worry, it's all going to be under control.
Yeah, like the flip of the tone in the message from announcements early in the year to this most recent one is like night and day. It's like all of a sudden they've turned on the lights and the broadband at the Reserve Bank and they're finally getting the headlines of everything that everybody else is reading and going, oh, you guys are actually living in the same economy as us now. Oh, thanks for catching up. It's only taken you all of 12 months.
What I struggle to keep up with is this, like, are they supposed to be focused on inflation? Are they supposed to focus on unemployment? Are they supposed to focus on the overall economy? Because I think if you've got 400,000 Kiwi people that want more work, then they must want more money, but they can't get it. Then we've got a major problem. And I think it hasn't been that high for some time.
Mate, correct me if I'm wrong, but if you got old G. Robinson on speed dial, we can call him and say, get that printing press or that government checkbook back open and we can start to flood some money through so that people are feeling like they got some of the sugar.
Well, I do
that
wonder,
was the secret, wasn't it?
Yeah, I do wonder if that's what we're going to see in 2026 with the election promises.
But back in the day, the old Reserve Bank did. So this is the fascinating thing with the Reserve Bank is the mandate used to be that two-pronged focus of keeping inflation within the target band of 1% and 3%, I believe, and an eye to employment or unemployment. It was a labour statistic of some kind. And then our new government came in and went back to old school and only focused on the one mandate, which is keeping inflation within the target band of 1% and 3%. Everything that I've seen about the Reserve Bank, and correct me if I'm wrong, is they look at historic data. They don't look at more of the anecdotal stuff, what's happening in the future, to then go, oh, okay, yes, this is historically what's happening. And if this is going to happen, plus what we're getting from everywhere else, because they've surely have got access to a lot more data than you and I, and they can then go, okay, let's plug this into some Excel graphs or an Excel spreadsheet to create a graph, maybe even Chazza on ChatGPT and say, hey, look, this is where the New Zealand economy is going. What do you reckon we should do, Chazza? And you go, oh, hey, look, Shrewsbury, based on everything you've inputted, I reckon you should have done a 50-point cut. You go, okay, cool. But it just seems to be just so backward looking. And then we get to the next OCR adjustment. It's like, oh, shit, things are a lot worse than what we thought they were going to be. Now we need to be hitting the panic button.
Yeah, and I was looking at a stat before that 74% of business owners at the moment expect costs to go up, which isn't a great sign for inflation, which is still sitting at 2.7% in the last update.
Ouch.
But of course, as well, I think they've probably got that GDP-ish data for the June period, which is now defunct, like you say, it's ages ago. But that is potentially going to be negative, which I think is not going to be a great thing for people to be learning about in September.
No.
Going, oh, the economy's still
cooked.
Going backwards, and people that don't get it are going to go, oh, what the hell? Like, this is bad. But I think so they're trying to front run that data coming out, saying, yeah, we know that's why we're going to get some lower interest rates, and by the end of the year, everything will be a bit rosier.
Sounds like a little bit of butt covering potentially of like acknowledging without directly acknowledging that they fucked up.
Well, yeah, I don't know if we'll ever get them to acknowledge
No,
that.
no, I don't think we will. But an interesting point that you raise on that business owners are still anticipating pricing increases, because if a business owner is thinking that prices are going to increase, what are they going to do to their own prices? Increase them. And it becomes the self-fulfilling prophecy that everything's going to keep going up. And at one point, something's going to break. And it will be the businesses that aren't managing this stuff appropriately. And we've spoken on a previous podcasts about having visibility of your pipeline. And we've recently done some work with a client where they've got some degree of visibility of their pipeline forward, but they track all of their backward work in terms of we've sent out quotes and tenders and proposals and all of this stuff. And that they weren't in such a good position. So I said, well, let's have a look at that. And I said, okay, well, you've sent out, let's say, for example, $1 million worth of quotes in 1 month. How many of those did you win? Crickets, nothing. Okay, well, that's not ideal. Why not? Oh, we don't know. Well, why don't you know? Well, don't you think you should ask? Oh, and when you normally work on that, let's say 30% ratio, that if we've got 10, we'd hope to maybe win 3 of them, $1 million worth of work, say, there's $300,000 worth of work that's been lost. They've got no idea as to whether that's pricing related or not. If people are going in there and undercutting them, then those businesses in time will ultimately fold. But what do you do in the meantime? Well, you've got to look at your break-even point, because I think break-even points in businesses are just under a huge amount of pressure, because there's so many businesses out there that are just carrying debt that they can't sustain because they're not generating enough cash flow.
Yeah.
And this is just a death spiral that businesses are going through. And it's not helped by Shrewsbury, because people, I don't think households appreciate, and I think you've touched on this before about the two-pronged or the double-edged sword that business owners have to face in terms of they've got rising costs domestically on the home front. Well, we're all paying more for butter and milk and stuff at the supermarket and power and insurance, but then the business owner on their hands then got to face, oh, my power's going up at my workshop, my rent's going up, that's going up. Yeah. And it's just like, oh, wow. So what do you do? And then the other thing is, the media are absolutely hammering mortgage interest rates. Oh, they're coming down and housing affordability is getting better. Fuck housing. Like, when are we going to actually address business funding and make it easier to do business in New Zealand and bring the rates down, to bring the cost of borrowing down, to make break even easier for business owners, or make the terms longer on a loan? So again, people that are not business owners probably don't appreciate that when you go and borrow money, you can't go and get it for 25 years. It's maybe 5, 7, 10 years of business debt. We can't, freaking get a car and stick that 25 years on the house. Thank you very much. And then for the pleasure of paying it back over 7 years, we're paying 8, 9, 10, 12%. But on the house, we're hunting how much? 4%. You're hearing, you might be able to get a 3 by the end of the year.
Yeah.
Meanwhile, the business owners out there absolutely battling, trying to get money in and reduce costs so that they've got a profit, some cash left over to pay the debt, and hopefully at the end of it, take some drawings.
Yeah, I was reading yesterday about how Kiwi Bank's results came out, and they were talking about growing their book, and their business lending was up $1 billion.
Wow.
Over a 12-month period. But that's all, $1 billion.
In 12 months, did you say?
Yeah.
That's not a lot.
And basically that was the only real growth across all of the banks, because some of the banks lent and some of them had it repaid, and so it basically $1 billion of credit. But I then was like, oh, hang on, I wonder how much is business intended lending but lent against a property, and so it's buried in the
housing stuff.
And so I think it's then distorted. But even
but it's a good insight nonetheless, though, that like in 12 months only $1 billion worth of credit has been added to the economy. No wonder we are cooked.
Yes,
because Mr. Banker from those big 4 Australian banks are all sitting there going, we don't believe in the housing market of New Zealand, so we're not going to lend.
Oh, the business, yeah.
Well, but they don't believe in housing because then they would add more to it. But it'd be interesting to see how much the housing debt's grown over that period as well.
Yeah, I should have known those figures out before.
But $1 billion.
That's it. But also, why aren't business owners taking risk? I think the bit that we keep missing is that, as a nation we keep missing is that we've got this aging demographic of business owners. They're going to be risk off. Like, why are they going to be going, fuck yeah, I'm going to expand, I'm going to grow, I'm going to buy my competitor? They're all going, and we're seeing it on outside of business where the baby boomers have gone epic, 6% term deposit rates. Yes, please. And we've never seen more money in term deposits. So we've got an aging demographic that are risk off. And then younger people are going, well, shit, you know, that they're the ones expected to go risk on and go, or like send it, do something.
Have we been getting too much hate in the comments to not refer to them as boomers?
Oh, no. I'm trying to be mindful. The baby boomers, shit. But, yeah, it's
on the flip
fascinating.
side of that, though, I think if you're a younger person and you want to own a business, I think now has never been the best. It has never been a better time to buy a business because conditions are ripe, I believe, because the last 2 to 3 years of trading in businesses has just been absolutely shite. So the business value that's traded poorly because of such a contracted economy, you could potentially pick up for a bargain. If you've in an appropriate position yourself to have cash and be able to get the debt to be able to borrow it, aka a house, because that's what New Zealand banks or the Australian banks like. But if you're in a position to buy a business off of a boomer, do it. I was talking to a young fella this week, but over the period of the last few months, they're very hungry to buy a business and they are looking for the right one. I've looked at a lot of IMs and they have sent me a couple. Oh, is this a good one? And then I sent them one of a client that potentially could be interested in selling. And they made an interesting comment to me the other day of just like, oh, we were talking to this dude that's got a business and he's an older guy. And we said, oh, we're looking at buying something. And he was just like, oh, well, I'm thinking of selling and, you know, And I'm just like, there it is. They've just showed somebody that they're interested by saying, hey, look, a little bit about me, a little bit about you, buying, selling, let's have a chat, advance it further. And they could buy a business being in the right place at the right time. Good on them.
It's going to be fascinating to see what the business owners who do sell, like what they do with that money. I had a very funny message this morning, and this guy was saying that I'll use his words, it fucks me off till no end, that his dad has a 7-figure rental property portfolio, but $100,000 invested in shares. And he's buying another property because he's like, oh, it's a great time to buy. He's like, Dad, what are you doing? But again, it shows like risk off, right? It's always worked. That's simple. That's basic. So like buy another one. I get it. Whereas putting money into the share market, I don't know, a bit scary. Too much risk. So then we don't do it. And I think we're a very risk averse nation.
You know what we need to do? Introduce a capital gains tax so that they will be forced to give some of it away back to the government to then reinvest into capital projects. And I've been that's my proponent of a capital gains tax is that it gets ring-fenced into a fund that then goes into capital projects.
Oh, that's quite sharp, eh? So it has to be spent on agreed. Like
you can't go and put it in the wash-up fund that the boomers then get to suck on the government tit of via their
superannuation
benefit that they get every fortnight.
It's not a benefit, Bill.
The largest beneficiary group on the budget. They're like, you cannot dispute facts. You boomers that are listening, I just love winding them up. But if we've got a capital gains tax, which I support in some form, that, and broadly speaking, go for it, keyboard warriors. But I think that the funds that come from that should go to a separate, ring-fenced investment fund that the government maybe contributes on top of, and they go, right, we're then going to put it into these projects that are going to have a longer-term benefit for the country. Because the boomers that are selling these businesses are going to get the cash, and it's going to go one of two places. It's either going to go to a bank and sit in a term deposit, like you've already said, or it's going to go to housing. They're the only things that they know because they're uneducated.
So I had to consult the Reserve Bank to find out a little bit of their decision-making, mate, and they've got a nice summary here. It says, common questions about the OCR. What did we decide? This time we cut the OCR to 3% because, 2 bullet points, New Zealand's economic recovery seems to have stalled in recent months.
Wow, a stall.
Well, I didn't realise that it was in the 5th gear. But apparently it's stalled.
Wow.
And spending by both households and businesses has been held back by economic uncertainty, higher unemployment, higher prices for some essential goods, and declining house prices. And I actually think that's part of it. 2,500 hospo businesses have closed over the last 12 months. It's about 20% ahead of where it was the year before. It's a decent increase. But a lot of these people, we have to remember, like, not everybody's well educated in terms of numbers in their business, so they're not even going to be tracking margin in the product or food that they're selling. But then if your landlord and your insurance and your power and shit comes along and, like, there's not much you can do about it, it's just, here you go, and you think, okay, well, power is what it is. Well, yeah, is what it is still can mean, okay, that's an 8% or an 18% increase, on the year before, and that can erode margins very quickly. And I reckon what we're finding or seeing out there with a lot of retail and hospo, this is my anecdotal, so when I say this is what we're seeing, it's not what we're seeing in our client base, is that these business owners are realizing, like, oh shit, I can't sell enough of the things that I want to sell to actually make this worthwhile or viable, because by then the insurance company's got theirs, the loan repayments have gone back on the equipment because they're on direct debit, the landlords had theirs, and basically, as we see, there's just story after story coming out, who gets burnt? Oh, the IRD.
Yeah.
So the whole thing's been propped up by IRD debt.
Easy access credit.
Yeah, because the whole model that worked so well for so long just isn't sustainable anymore because there's not enough margin in the things that you're selling. Not true for all hospital and retail businesses, but I think for a lot of them that don't understand numbers, that's what's probably happening underneath.
I wonder if just more broadly we will see over the next few years, because of the pressure that businesses have been under more recently, a great consolidation, where you're going to see businesses that are better placed in that they've got a healthier balance sheet. And then what we mean by that is they've got lower debt, they're able to consistently spit out profits and cash, that they'll then be able to go and spot opportunity faster because they're a little bit more nimble in terms of what they can do with decision making and go, we'll take that competitor, we'll take that one, and we're buying them all at a discount. We'll roll them all up into our bigger machine, and then those other ones that are just left will then go and pay off your debt that you've got that you haven't been able to pay because you haven't been able to trade profitably to do that, and then we'll just carry on and leave it to us.
And that would be a really good question that we should put to some of these banks economists, saying, what appetite for lending are you seeing for acquisition? Because I was having the same thoughts the other day. It's like, for people to understand it, the bigger businesses that have built up reserves over time and got a stronger balance sheet, they can hold their breath longer in a tough economic environment.
It's a good way to put it. Hold your breath.
Whereas we saw some data the other day that 1 in 5 businesses is carrying a loss from 2024. That's a shitload of losses that have been reported to the IRD. 2025 wouldn't have been that much better for people, but only so many of those businesses are going to be able to sustain that and then use up those losses and then become profitable before they have to go, well, a lot of them simply aren't going to be able to do that, and they're going to have to go, okay, we've got to tap out, So those with a stronger balance sheet can probably absorb some of those losses and then trade out of it on the other side as things turn.
And that's those smaller businesses, like I think holding your breath, I think that's a really good way to put it, because the other business owners are going to be treading water and their heads bobbing up and down, gasping for their next bit of breath. And the sad reality about these OCR adjustments being slow, because we're waiting for historic data, Shrewsbury, if you're listening, is that the impact of that decrease isn't going to be felt on the business owner's P&L for probably another 12 months, I reckon, by the time that flows through. Like that, they might be on some fixed rates debt. Banks, I believe, are typically slower at adjusting business rates than they are housing rates. So the business owners, they're freaking peddling water, treading water so fast that they're just going to absolutely run out of energy, and then boof, it implodes.
Yeah, the thing that worries me that we also aren't talking about when we have all these announcements coming out is scarring. Because I guess with like a marketing brain and I'm fascinated by psychology and consumer behaviour, it's all good and well to tell people, oh, hey, great, your interest rates are coming down, get back out there and spend and whatnot. But I flagged this a long time ago. I said, remember that people have been burnt through this period, and that's their first lesson about rising interest rates, and they'll go, shit, I've got a bit of extra, I'm going to pay my debt down faster because that sucked. And I think it's just naive to think, okay, we can decrease interest rates and everyone's just going to go, oh, hallelujah, it's easy again, and get out there and start hiring and start investing into equipment and stuff. I reckon there'll still be this sort of Kiwi scarring lag over the last 3 years where people have gone, shit, that was hard. Like, I really want to make sure I get this decision. Whereas if you contrast it to the environment we were in, when there was so much credit out there and the IRD were lending 0% debt, and it was kind of like, oh, you might as well get it because you can, mate, and pay down some of that debt over there and we'll keep it, you know.
Yeah.
It was just, people were just off just making decisions without even seeking advice because they're so confident that they would make the money back and they were kicking ass.
Is that their small business cash flow?
Yeah, and just anything in general, right? People were off hiring and stuff, and
That's bit a lot of people in the ass because they take the money interest free for, was it 2 years, 3 years? And then by the time that expired, it's like, oh, now you've got to make repayments and there's interest. Like, oh, I forgot about that.
Yeah.
Oh, it was a gross time.
But I just think the two contrasting environments are so different. Like, we went from it being so easy to then so grindy that now when we just go, oh, okay, debt's cheaper again, and it's not, it's not as cheap as it was during COVID. People aren't going to go, oh, okay, wicked. Oh, yeah, sorry, thanks for letting me know. I'll just nip out. I'm just heading down to the Beamer store. I'll be right back. I'm just hiring 3 people. People are going to still be a bit worried about things, I think.
And I think, like, before recording this, we were jumping online and just looking at the doom and gloom in the headlines about consumer confidence down. The KiwiBank thing that we spoke about before of, like, there's just no one using this investment boost thing. We know that unemployment is up. Finally, the OCR is coming down. Like, all the points are there. Like, why hasn't... And what I commented earlier around the OCR announcement was just the change or shift in tone of the message, and then their forward-looking track of where the OCR is going to go has dropped significantly. And now we're all seeing these housing rates come down. It's like, well, if we know that 2.5% is going to be our final rate and we're at 3 now, why don't they just drop it to 2.5 like next month and let's get on with it?
Yeah. I had the same thoughts on the way up. I'm like, let's just get to the
end outcome and just
yeah.
Like, I just don't get it. If we know that we're getting to 2.5, and so that's 2 more cuts away from getting to that point, and we know how grim things are, that to actually put some level of spark in there to give people some confidence to go out and actually start and do things, and to make the cost of doing business and living cheaper, because it'll make interest cheaper, so then people will go, oh yeah, I feel better, so now I'll go out and buy stuff. Like, let's just get there and make this happen.
I have a little nudging feeling that in a few years, we're going to look back and all the narrative is going to be, oh, what we've learned is that the official cash rate isn't as effective of managing the economy as it used to be. And that will become the summary. And we'll realise, shit, over this last little while, things have dramatically changed with the amount of money that's parked in term deposits and stuff. And so we want to suck that money out of the economy to earn interest and whatnot. And then we want to, impact those who are borrowing. But, we've got such large levels of debt, but such high levels of wealth as well, that it just doesn't work like it used to work. And the baby boomers are sitting on that cash. And are they, with a lower interest rate, it's going to come back into a transaction account or sit in that TD? Are they just going to go, let's get out there and let's just spend and, support the local? Or do they just go, oh, okay, well, we're just going to continue to accumulate, or I've just got to protect that money through to retire, through to going into risk here or whatever? I do wonder if maybe it's just not the blunt instrument that we think it is, isn't as good as what it once was.
I think there's a risk there that they'll get this money from selling their businesses and downsizing the homes, and then they'll just go on cruises and then spend the money overseas.
Yeah, it goes out.
Yeah. And then we're fucked.
Yeah.
Because we're all relying on this boomer cash to get realised. Then the next thing after that is once they're all gone and we get this great wealth transfer that is getting some traction in the media, that there's going to be this younger generation that gets all this wealth, doesn't know what to do with it, so then buys houses.
Yeah, I reckon they'll invest. A lot of them will invest rather than property.
Here's hoping. Here's hoping. But the risk, they'll invest it overseas into the latest meme stock, rather than going, what can we be doing domestically?
Yeah, it's going to be fascinating. I think the other bit that...
Maybe there's a case there for swashbucklers' inheritance tax. Just saying. Yeah. There's another way to clip the ticket, put it into that infrastructure fund. Let's go.
We shall find out as soon as Labor actually announce what these policies are. Now, I was looking at some data from 2024 where the banks were banging on about how much they expected property to rise, and I made a video poking fun at them doing a 2025 prediction where I read out all of the predictions for 2024 and then revealed at the end of it, that was actually 2024. They got it wrong. So people thought that they were listening to 2025 predictions.
Yeah.
Anyway, we're at the point where they're wrong again for 2025.
Shock.
But my conclusion when I was looking at their 2025 predictions was, how can they be so confident about growth in housing prices when more people are going to lose their jobs? Because, again, just going to psychology, if I'm worried about losing my job, I'm probably not out there, thinking, oh, she'll be right, mate, I might go to this open home and buy a house. I'm probably thinking, I need to find out what's happening at work.
And isn't it ironic that one of those banks who's purporting increases to the economy and housing prices has now got a headline about employees being worried about a restructure?
Oh, so two stories that come to mind and just sort of play on this uncertainty. I had somebody reach out to me recently. They're in, let's just say the South Island to keep it broad. And they said, I keep an eye every week on jobs in my industry. And then I compare it to different parts of Australia.
Oh, wow.
And I'm like, why would you even be doing that? Okay? Like, that's probably not a good use of your time unless you are uncertain and worried about potentially losing your job. But basically their conclusion was, if I lose my job, to get a similar job, I will have to move to Australia.
Wow.
Yeah. So that's where their brain is at. And this is like when, everything's starting to and should be getting better soon. But this is, an example of what somebody who's educated is thinking about. And I think then I was talking to somebody who's in the Wellington region. I was saying, shit, it sounds like it's gnarly down there. It's tough in Auckland. Wellington and Auckland are the two, hard-hit regions. Said, yeah, it's not so much people have lost their jobs, it's that people are still sitting in limbo wondering, am I going to lose my job?
Wow.
So I think there's still that high level of uncertainty for people that creates, and until we can shake that, and I think that's going to take government stimulus rather than, drop an OCR a little bit further for people to go, okay, I've got less to worry about, I can move forward with a bit more confidence. And then we stop having these types of combos and just roll on.
Maybe we need to do a roundtable with some of these bankers and get them on the pod because I think it was earlier this week, one of the banks, the red one, Westpac, has released a report that they believe the New Zealand economy is going to outperform Australia.
Wow.
Over the next 12 months. And then it's been reviewed, and whoever reviewed it that I was listening to believes the report is quite valid and right. And I'm just like, hello, do you guys, is there another New Zealand on this world map that we don't know about? Because, are we looking at the same data, or are you guys, got some rose-tinted glasses on that we need to be borrowing?
Yeah.
Because no one's seeing it.
I wonder what data they've got. I mean, I wrote a quick piece the other day when I was in the Gold Coast. I could look out of my window and there's 9 cranes. When I drive into Auckland, I try and count how many cranes I can see.
The old crane index, yeah.
And there's probably 5 in the air.
Not a lot going on, eh?
And Gold Coast in one part, just one 180-degree view. I'm like, shit, there's 9 cranes building stuff.
Yeah.
It was really interesting to be back in an economy that's just humming and just a little micro, and just how happy people were. And I mean, part of it's probably being, close to the beach and the sun and stuff, but yeah, just lots going on. People at the rugby league, a lot of Kiwis there too.
Tax deductible business trips, no doubt.
Yeah. And just, out and about in restaurants and bars and things like that, but very stark.
I'd be interested if anyone's still listening to this, if this is because we're trapped a little bit in the Auckland bubble. Because I mentioned a little while ago that I went to the Bay of Plenty, spent some time in Mount Maunganui, and just the feeling of the different mood down there. I was down in Hawke's Bay recently as well. And then with your comments about just how bright and cheery everybody is on the Gold Coast and just the cranes and stuff, there's that same vibe. Well, I got a sense of being a visitor, at least in the Hawke's Bay, that people are happier. One thing I noticed, and I made a comment to my wife, almost every shop that we went into in Napier, because we were strolling through, checking out all the Art Deco, because that's the thing that you do when you're in Napier, apparently. Walk into a shop, hi, how you going? Can I help you with anything? And it was either the lady or the dude that was in there, and it's probably the owner of the business, didn't know, but they were all bright and cheery, happy to be alive, and thankful to have you in their shop.
Nice.
I said to Grace, I was like, have you noticed this? And I'm like, I bet you don't get this in Auckland. It's just like, oh, yeah, you do. I'm like, no fucking way you don't.
Yeah.
No way. These guys, like, this is how it's done properly.
Bit refreshing.
Yeah, it is. And then the other thing, and I mentioned it back in the office, was leaving Auckland, the private jets, that they're landing in Auckland and then disappearing. And they're disappearing to the regions. And I wonder if they're picking up a sense that Auckland is not the place to be and it's all happening south of the Bombays.
Well, certainly, because Kiwibank put out some data recently and they called it the regional divide widens as everything just gets better the further you go south.
Yes.
So it's quite comprehensive, but it's got an economic score for 2025 and goes from sort of like 1 to 10, and it's, 10 is scorching hot. But even down there in the Otago and Southland region, it's just right. Goldilocks is sleeping. But if you're into the likes of the Bay of Plenty, is actually a 3. So cold it's chilly, but not esky.
Wow. They're happy down there.
In the Canterbury region and the Upper South Island, it's a 4. But also allegedly, the Northland region, it's a 3. Auckland's allegedly a 4. But, the South Island seem to be doing a lot better. Even the Waikato, because people were saying, well, it's farming, that's why the South Island are like that. And they're like, well, why isn't the Waikato like that? But, it's certainly nothing is above a 5.
Across the country.
Yeah.
Yeah, wow.
Which is a little bit scary.
Yeah, and that's surprising, like, when you're looking at that, because the mood when you get outside of Auckland would suggest that it's a lot more rosier, that it's a 7 or an 8.
Yeah.
It's got a vibe about it that, everything's good. Whereas Auckland, definitely, I'm surprised that you said it was a 4. I would have said maybe a 2 or a 3.
I think my overarching thing with this whole decrease and where we're going is that they've lost control of the narrative, and everybody is just trapped in this kind of, it is hard. And I'm not saying it's not hard, but they can't, like, they know that they've got to try and get it into Kiwi people's heads that actually things aren't as bad as, like, we're making them worse. And then Nicola Willis came out and tried to say something like that and just got absolutely slaughtered, where she was like, people are talking down the economy. And they just can't get there yet. We're not at that point where you can go, there's, recently it was like green shoots and there's all this fashion and 2-speed economy and all these slang. You just
faded away.
You need more Kiwi people to be like, I'm feeling pretty good about things. And until that happens, I think we're stuck in this funk.
And it makes you then think, well, what is the average person, and then what is it to go another subset from that? What does a business owner need to do to feel happy about things?
Yeah.
And I would probably be pretty confident saying there's not a lot of people that are in business that would know the answer to that.
Well, and again, that goes to psychology, right? Like, how do you make people happy? And I don't think people put enough thinking into that. So then they do just buy into the negative narrative. And we talk all the time about, what wins have business owners had, being grateful, what are you looking forward to, and try and drag people forward.
Yeah.
But if you're not conscious of doing that, I think everything is basically like, it's pulling you the other way. And that's why I reckon they've kind of signaled with this latest OCR drop that, okay, we're going to cut it faster to try and get this convo going of, better times are coming.
Yeah.
Because they just can't get control of this narrative.
No, they can, it does. You're right. It feels like ick is a word that comes to mind, of just like so many people are just and sitting back. And it's like, well, if you were to make a decision, what would you do? And I think so many people are sitting there and go, well, I don't know. I've been spent too fucking long whinging about everything that I don't freaking know what to do next.
That's a good question. What'd you say? If you were to make a decision, what would you do?
Yeah.
Yeah.
Like, you'd be a deer in headlights or a possum in headlights. Because I think people are just so trapped in that media message or theme of, like, well, it is bad. Well, so, okay, if everyone's telling me that it's bad, I've got to believe that it's bad. Well, actually, let's flip it and go, well, if everything is good, what are you going to do? And people are then just going to go,
yeah.
I haven't thought about it.
Do you know what's really interesting is, like, Sharesies are seeing record deposits. And Leighton talks about how he runs a business that's to do with beer and retail and whatnot. And he's like, that's getting smashed. But my other business over here is just collecting new sign-ups and people depositing money and investing. You think, he sees like both sides of it. You would think that business would be struggling, that people can't invest and can't be depositing.
Because they don't have the disposable income.
Yeah, but people are still finding a way to do it and prioritising it. So I think it comes back to the cost of living, and that's the bit, because butter insurance, you know, fuel. Even this Aussie guy said to me the other day, he was like, it's like, I heard your fuel's $3 a litre over there. And I was like, oh, is it? And I was like, I don't know, because I'm driving around in a Tesla. But like power, just everything, rates. And I think that's the underlying bit that just keeps, to excuse my French here, like fucking people off. Because they're just constantly getting bombarded by another price increase that's out of their control. And that's what they're seeing and going, is my income actually moving with that?
And then for business owners, and I suspect that so many of them don't have the time to look at their P&L, and if they do, look at it and go, oh, what does all this mean? And we've singled this out before, that if you look over the last 3 to 4 years, that insurance line, it's probably near on tripled over 4 years potentially, where you've got some clients that have gone from 20, 30 and now 40 grand a year in insurance premiums. Coming back to that earlier point of break even, like your break-even point has just gone up so much more because your insurance premiums have gone up to manage a risk that may or may not actually happen. So then you have to sell more in an economy where no one's demanding anything.
Yeah.
Like business owners are buggered. And we sit back and we're waiting for the OCR to drop to make the cost of the debt that we've got cheaper to reduce our break-even point, to give us some hope that our business is going to be profitable. But we're sitting back waiting because housing's the priority.
I got in an Uber yesterday with a migrant into New Zealand, and they were telling me about what they do, and they're effectively self-employed in business. And I said, they were telling me all the different sorts of ways they have to make money, and I said, what do you think is a bit of the difference between Kiwi people and then the likes of yourself, who are so resourceful and so willing to go and find different ways to make money? And they said, one thing that they've noticed from the friends that they've made that are, you know, out and out Kiwi people, let's say, is that like, a lot of them are like, no, I don't, that's too hard. I want, like, the reason I have a job is because it's easier. And you don't get into business because there's too many ups and downs, and I don't want to go through the downs. And so that's very true, right? Like, there are ups and downs in business, and you think, like, a lot of people just aren't cut out for that. And I think the business owners, like we are willing to go through the ups and downs, but we probably didn't expect it to be this hard for so long. And I think one thing that you and I have both seen and talked about 1,000 times is that I think business owners have underestimated how hard they're going to have to push and how many stones they're going to have to turn over. And, you know, for some time we could get by just not even turning over the rock, and the crab would come out and be like, oh, epic. And now you turn it over and it's like, it's not there.
I would actually like to think that this is normal for business.
Yes.
Like that you've actually got to work. Like this will force you to get out of your comfort zone and do something different to capture the attention of a market and an audience and actually add some value. Rather than in a time where there's so much fucking cash floating around, pumped up from those pack of people that used to be here, that it was just, we've got so much cash, we'll go and buy the jet ski, we'll go and buy the boat, we'll do this, we'll do that. Like, it was just easy. That's not business. We're just sucking on a sugar high. And without even having to think, like everyone's just coming to me. Then all of a sudden we've got supply chain challenges because we can't get enough jet skis into the country. And it's just like, well, no, we need to flip it now and go, there's enough jet skis, but there's not enough demand. How do we create the demand? Like let's get back to business, because if we can create demand, it means you're going to have to add value. To add value, you need to understand your consumer and be solving a problem. And I think there's a lot of business owners there that haven't unpacked that.
In an email that I sent out today, I said, sometimes with business owners, I know we always use the sending an email example, but it's just easy because it's just.
But it
helps,
works.
Yeah, and it helps give an example of an actionable point. But, you know, business owner getting stuck with what they have to say. I'm like, that's because you're making it about you, what you have to say.
Yeah.
You should be thinking about your database and how you can help them, and what's a problem that they have, what could you solve for them. I'm like, if you get your brain to think about that rather than what should I say, that's where I'm stuck. It's because you haven't trained your brain to be thinking about the customer.
Yeah.
And when it was so easy, we didn't have to do that. We just basically like hope that shit would happen, and it was. And we were like, I'm good at this.
Your nugget, I think, is probably one of the best, and it's from the early days. And I don't think it'll ever get old, of just like, what are the top 5 questions that you get asked? I mean, there's 5 pieces of content that you can put into an email that, boom, is directly about your customer or your client or how you add value, because they're asking questions. Yeah,
I was saying to some people the other day, think about your story. So your story being like why you do what you do and what you love about it. There's plenty of content there. Your client stories, so the people that you currently deal with, and the stories that they've had and from the work that you've done with them, and then your potential clients, then what are they going to need to hear from you? So they're going to need to hear a blend of those two, plus the things around pain points, what you can solve for them, what you can do for them, and you can mix those two into that third piece. Then you've got content galore. But, will people do it? Probably not. But, that's, but I think as well.
No, because they're waiting for the housing market to recover, Luke, to feel better about everything.
Well, I guess that's actually what we are waiting for too, right? So that people will then go and borrow more money to then spend into the economy. But hey, until that happens and we see, growth in that space, then we can't rely on that either.
And it's I look at it and go, well, that's a debt-fueled increase to the economy rather than a value increase in the economy by actually generating more wealth by a business actually selling more because they've had to fight for it. Where people have actually had to hand over cash that's not fueled from inflated housing prices. Yeah,
because you're getting more valuable by increasing your skill and solving problems, and so therefore you transact rather than just like, things are pretty tough, but at least I've got some equity in my property. I'll go borrow against that again. Yeah. Oh, great. Now I've got another 20 grand. Oh, yeah, life's a bit easier. You think, okay, like what have you learned from doing that? And that's why, we've been on about this the other day on the pod where I was saying there's 400,000 people looking for more work and they're out there applying for jobs, and you're like, you shouldn't be applying for jobs. You should be solving problems for people, especially those baby boomers who've got the cash tied up in those term deposits and in their transaction accounts. They're going to want some shit done. But another example I gave the other day, and you've had your car cleaned recently, and I did some content with someone talking about cleaning cars, and they make tens of thousands of dollars doing that, and then have taught other people to do it. And he mentions a $200 car clean, and someone in the comments like, "Oh, you lost me at $200 for a car clean," and
like, great, you're not an ideal client.
Yeah, and you're like, because they can't see the opportunity, they're just looking at their world. Instead of they're having a curious mind to go, shit, people pay $200 to clean a car. I could do that. They're like, oh, this is bullshit. And then, even Rose, who does the supper clubs, talking about minimum $2,500 spend to host a supper club, and someone's like, well, there's your first problem. That's where you're going wrong. And it's like, well, their brain is like, this can't work.
Yeah,
Rose is booked out. So, but you got all these Kiwi people that are just like blind to opportunity because they're so.
It's that tall poppy mindset that the environment that they've created for themselves, they then put a lens on to everybody else rather than flipping it and going, how have they managed to create a product that I can't afford, and what can I do or what can I learn from them to be able to get into their position where I'm selling something for $200 or $2,500 and no one's questioning the price. Because clearly there's a market out there.
Yeah, like no curiosity. Yeah. And it's this whole like, oh, I better find a reason why that can't happen rather than be like, shit, if they can do it, well then why not me? And I think that's the bit that we've lost in New Zealand is the kind of, well, if they can do it, well, I could learn it. I could figure it out. And we're basically like, nah, can't happen. But it'd be fascinating to see how long we stay stuck here for, mate. But I am excited because I know this is negative, but I mean, it's not, it's easier when it's frothy, but it's just bullshit because, I mean, look at a lot of the businesses that are now not sustainable in a tough economy, but they were in a frothy economy with fake and cheap credit. And you go, well, those are two polar like opposites, but the reality's somewhere in the middle. But they didn't learn in the good time, okay, I better prepare for the bad time, so they're not going to make it through. Yeah. And then you've got people at the moment that are busting their ass, that are going above and beyond. They're going to get rewarded like when things get better.
100%.
And that's what I'm excited for. Those people who are hanging in there and going, I'm going to make some shit happen, like they will have good days coming, and we'll get to celebrate those with them because they won't quit and won't give up.